Hi, welcome to the channel. This video contains a recorded session. If you like the content, leave a thumbs up and do a subscription. I'll upload more videos based on the response. Now, let me just quickly recap what we have discussed last week, and then I'll come back to the reason why I see this is going to be not just a few sessions, why you need to really have a closer look on the market and what's happening in the market, and whatever the stocks that you're holding it, what is the strategy that you have to follow. That's my kind of the long term goal in terms of like in this sessions what I'm trying to share it here. To start with, yeah, we discussed last week why the stock market is not for the retailers, why it's always retailers lose the money. We discussed, in general, the retailers, the the approach to the market is they think like when a company releases the earning and then it sees that the earning results are good and the market condition is good, and it is always expected the stock to go up, but sometimes it doesn't happen the same way what they think, even though the market gives them surprise due to various reasons. We discussed about the multiple reasons why that is happening. I covered like why the mystery in the market, why it's always against the retailers. We discussed like large investors versus retail investors. I mean, large investors were like hedge funds or very big insurance companies and mutual funds. They all well informed about the market. I mean, well informed in the means they have a much more knowledge than the retail investors. Also, the money they play in the market is very huge. Like maybe an individual investors like a retailer, maybe they play in crores, but they play in multi crores. Like in US terms, we are like billions of dollars and millions of dollars they play around. So they all have a much bigger control than the retail investors. That's along with their knowledge about the market, the informations what they have it. Easily, the retail investors become like prey for them. They manipulate easily the retail investors. That's the reason why retail investors always lose the money. But idea of my knowledge sharing is if we are able to figure it out that what this big retail investors, sorry, big large investors or the smart money doing in the market, if you are able to figure it out exactly what they are doing it, and you also become one of them, then it is a easy way that you can make money. So the whole approach that I'm going to talk about in upcoming sessions where revealing this fact, how the smart money play happens, why the large investors take decisions in a totally in opposite way what retail investors do daily in the market. How do you able to figure it out, all those things? I briefly touched upon that in the last week, but how they really able to make those decisions is based on these three factors, is like a supply versus demand, how long the cost is built in the market and what is the effect after that cost is built, and what is this effort versus results. Also, I was just touching upon between the leading indicator versus the lagging indicator. What does actually it means is like whatever that we take a decision as the retailer and we believe that with that I can really master in the market and make more money. It's all past data. Like whatever the indicator we talk about, like MACD indicator or RSI, Bollinger Band, there are so many hundreds of indicators are available. but all that indicators like a moving average, this all based on past data, like what happened yesterday and 1 week back or 1 month back or year, 2 3 years of history. Based on that, they will come up with some indicators, nice indicator to predict the future. But those are all lagging indicators that can give you a clarity about what happened in the past, but no one can tell you what would happen next day market opens. It's completely for everyone. It is like you may be able to predict, but you will never be 100% correct on every day. So that's the real problem for anybody to make money in the market. So how do we, you know, get more knowledge about what would happen tomorrow is based on the leading indicators. The leading indicators is purely based on price action. That's what we are going to look at it in the upcoming sessions. What I mean by price action, when I'm explaining you will be able to understand. So it's purely based on what is the stock price and volume. These are all the two important factors when I'm talking about this leading indicators. And one other factor, always like the reason why a retailer will lose money is this offset. I discussed about it. Like there is always a offset between the real economic cycle and then stock market cycle, because stock market always moves in an offset. That means if you think stock market is going up, at the time real economy is going down. I think today you are able to see my mouse cursor, right? Is that everybody able to see, right, what I'm talking about?
Yeah.
Yeah, yes,
Okay. So you see here the black line, it's a stock market cycle. And then the dotted green line is the economic cycle. When I mean economic cycle, what we are discussing here is about the country's GDP. We talk about like one country's GDP is the indicator for that country's economy. So when we say two consecutive GDP value goes in negative, and third month GDP consider as like the country entered into the recession. So that is the factor that they look at it. What does it mean? A recession is when this dotted green line when goes below that the horizontal line. That means the two consecutive months we are keep making GDP, the country is going down. That's an indicator that the country entered into the recession. But you see, when the country is in the recession, this is like you assume this is a scale of so 12 months time. This is where economy completed its recession and started its going up again. But meanwhile, if you look at the stock market, like a few months before, like 6 to 9 months before itself, stock market started going up. If you wait this real economy to come up, at that time stock market went half of the time. Like if you hold a stock, like you bought Amazon at this time, then you will make a money this whole up movement. And in case that you looking for some economic like some economist says that he's the guru in economy, that he knows everything about financial economy cycle and everything, he will only declare that economy is doing well after 9 months time. Okay, at this stage. Meanwhile, market is half of the run is completed. If you are buying it here, Amazon, you maybe for an example, you will get for $100. But if you wait for the real news coming in the CNBC or Money Market or whatever other website that you follow, they will only declare that economy is come out of recession after 9 or 8 months later. Meanwhile, Amazon might have went to 150 or 200. So what I'm trying to go and make all of you to understand here is how you can enter at this stage. not at somebody says you at the paper or news channel that, now it is economy is come up, you can go and enter that. That's the big difference you will make in the investment. You will enter very early in the market. It can be only happen if you know exactly what the big guys are doing it. Okay. What the big guys are doing it, they start accumulating the stock here itself. What you see in this black line, right? Coming down. They exactly enter at the bottom and then they will exit at the top. Okay. So they enjoy the whole run. They will, for example, if it is they were going to have a their plan to accumulate a stock. For example, I'll say Baba is the one case. They will enter exactly at this stage. The price would be around $56 at this stage. Okay. And then they be in the market until Baba goes to 300. And then they will exit here. How they were able to do it, that is their skill. That is the skill that we have to, as a retailer, if you are able to find out that and then you are able to master in that, then you will make a lot of money. That's the real idea behind that the sessions I'm going to talk about it. How do we do it? It's not just it's like another indicator. No, we are not talking about another MACD indicator or a moving average or anything which is like a lagging indicator. What I'm going to discuss here is based on these concepts. What is supply? What is demand? What is cause and what is effect, and effort versus results? If these three factors, if you are able to apply to any of this chart pattern and then look at what is happening here, then that's where you will be able to understand the context of the market. Okay. I'll just again repeat it, like these three factors: supply versus demand, cause and effect, and effort versus result. We will extensively discuss this going forward one by one with a lot of charts. How do you apply each one of this factor when you are reading the charts? Thank you for watching. If you really like the content, just leave a thumbs up and do a subscription. I'll